All right, let's talk about something that trips up almost everyone with a side gig: taxes. In this explainer, we're going to break down everything you need to know for the 2026 tax year so you can stop worrying and start feeling confident about your business.
You know, this quote really hits home, doesn't it? The fear that taxes are just going to gobble up all your hard-earned cash. But seriously, don't worry. We're going to flip that script and turn all that anxiety into a solid plan.
So, if you've recently jumped into freelancing, maybe driving for a rideshare or selling stuff online, guess what? You're not just an employee anymore. You're a business owner, and you are in exactly the right place to figure out what that means.
Okay, first things first, we got to figure out what the IRS actually considers a business. And, spoiler alert, it's probably a lot broader than you think.
So, look at those key words: regular and continuous. The IRS is really looking at your intent and your pattern. That one-time garage sale to clear out your closet, that doesn't count. But that Etsy shop you're running every weekend? Oh yeah, that definitely does.
And this really applies to a huge range of things. Whether you're doing gig work, you've got an e-commerce store, you're doing freelance design, or even just renting out a room, if your goal is to make a profit, the IRS sees you as a business.
All right, let's get into the nitty-gritty, because this is where people can get a little lost. When you've got a side hustle, you're generally on the hook for 3 different kinds of taxes on that money you're making.
So you've got your regular federal income tax, which is based on those tax brackets you're already familiar with. Then there's this new thing called self-employment tax. We'll get to that in a sec. And of course, depending on where you live, you've probably got state income tax too.
This number right here, 15.3%, this is the one that really surprises people when they first see it. It looks kind of high, but there's actually a pretty simple reason for it. See, here's how it works. At a normal job, you pay 7.65% for Social Security and Medicare, right? And then your employer pays a matching 7.65%. Well, when you're self-employed, you're both the employee and the employer, so you have to pay both halves. That's all this is.
And here's where the rubber meets the road. Let's say you cleared $20,000 in profit. That 15.3% works out to about $3,000. And that's just the self-employment tax, before we even talk about your regular income tax. So, yeah, it's a big deal.
But, and this is a big but, here's some good news. The IRS gives you a break. They let you deduct the employer half that you paid, that's 7.65%, which actually lowers your overall taxable income. It is a really important deduction you do not want to forget.
Okay, now for my favorite part. This is the most empowering part of the whole thing: how you can legally and ethically lower what you owe. Let's talk about business deductions.
Just think about it this way. You only pay taxes on your profit, not on every dollar that comes in. So your goal, your mission, is to track every single business expense to make that bar on the right as tiny as legally possible.
So what can you deduct? Well, the IRS calls them ordinary and necessary expenses. We're talking about things like your home office space, the miles you drive for business, any software you buy, a percentage of your internet bill. It all adds up.
And speaking of mileage, if you drive for your side hustle at all, deliveries, client meetings, whatever, tracking your miles is an absolute game changer. For 2026, at 70 cents a mile, this deduction adds up ridiculously fast.
Look at this simple math. It shows you exactly why tracking matters so much. If you bring in $20,000, but you had $1,000 in legitimate expenses, you're only paying tax on $12,000 of profit. That is a huge difference. That is real money that stays in your pocket.
Okay, so you've tracked your income, you've tracked your expenses. Now what? How do you actually get this information to the IRS? Let's walk through the actual filing process.
So, sometime in January, you should start getting these forms in the mail or online from clients or platforms like Uber or Etsy. But, and this is crucial, even if you don't get a form, you are still legally required to report all of your side hustle income, every penny.
Here is your roadmap. It's really that simple. You gather up all your records. Then you fill out a Schedule C. That's basically your business's report card for the year. That form tells you your profit, which you use to figure out your self-employment tax on Schedule SE. Then it all flows on to your main Form 1040.
All right, to wrap this up, let's talk about some of the common traps that beginners fall into. And more importantly, let's talk about how you can sidestep them completely.
Okay, these 3 fixes will save you so much stress. First, get an app to track expenses. Just do it. Second, pay your taxes quarterly so you don't get slammed with a monster bill in April. And my absolute favorite tip, Every single time you get paid, immediately move 30% of it into a separate savings account. That's your tax money. Don't touch it.
And don't leave money on the table. Check out big tax breaks like the Qualified Business Income or QBI deduction. It's huge. It can let you deduct up to 20% of your profit. Also, think about opening a retirement plan for yourself, like a SEP IRA. You can save for your future and get a fantastic tax deduction right now.
And look, of course, while this gives you a really solid foundation, this is all for educational purposes. It's always a smart move to talk with a real tax pro who can give you advice that's tailored just for you.